10/5/2013 NASDAQ Composite. It's the best index out here out of all the indexes. It has the most strength because we have a lot of high flyer tech companies that have pushed this thing to all-time bull market highs. It's had a pullback here to the top of this area of support where the cursor is. The government shutdown is the first weekend in play. It's about $300 per day as the government has shut itself down. They can't seem to come to an agreement. Corporate earnings start Monday. Some of the high flyers like Tesla, there are many of them, Tesla being one. Netflix, a lot of these stocks that have had this great bull rally, they're going to have to report the earnings. And when they do come out with corporate earnings, they're not going to be as rosy as people think. We're not saying that they're going to be a total catastrophe, but we're going to say that it would be a good reason that the market would have a reason to sell and take profits. At 2% current GDP growth, we did not get the monthly jobs report number. Some of the government reporting agencies are not releasing their numbers because they're shut down. I can say one thing for sure, that 3,700 is where the 10-week moving average is, and the 20-week moving average remains down here. We've already showed how the Dow broke its 10-week and 20-week, but this particular index and the NASDAQ Composite and the NASDAQ 100 still remain at overbought levels and have not ran the course of a good size pullback or a correction for that matter. As a matter of fact, we haven't had a good correction in 2 years, a meaningful one of 10%. And one of the things that we're going to be looking at is in this particular index in itself is what it looks like on a monthly level, because we're going to show you on a monthly level it's at 98%. It's still overbought. That means that the volatility in the NASDAQ Composite lies ahead of us. It's forward looking, it's coming, no one's going to get out of it. That means that the fear indicators in the CBO volatility NASDAQ 100 have not played their course, and they will. So, what we're telling people, our trading base around the world, is that the bull run has been extremely wonderful for calendar 2013. However, when you take a look at where the growth is, we don't see the growth. That doesn't mean that 2014, if they can get their act together, that there could be some growth. Who knows? It's a profitless rally. There's lots of things that go behind it. Here's a daily chart. It's not as overbought as 100%. It had a correction to 3750s, testing the daily moving averages. We will tell you beyond a reasonable doubt that the volatility will increase. Outside of the government shutdown, outside of the debt ceiling, is that each individual stocks of the leaderships, the Pricelines of the world, the Googles of the world, there are many NASDAQ components that have had great moves that are due for a meaningful pullback where the money on the sideline could find a chance to buy the opportunities. But at the current high, exuberant, complacent levels, we don't find the buying opportunity compelling at all until they correct. Once they correct, then we can say that the story changes as it does. So there is the daily. We've showed the weekly. It's one of the few indexes that have outperformed all other asset allocations out here that have not corrected. That means that calendar 2013 has been extremely good for the bulls, but once again, complacency, overbought levels are overbought levels, and they're not to be denied. So as we roll through October, we're going to see where a lot of stocks will finally get a chance to get on sale. That's when you want to be the buyer. You don't want to buy them up here in the NASDAQ Composite because you will pay a price. And that at some point, as we go through this particular Government is only a piece of it. The earnings are far more important than the government shutdown or the debt ceiling. It is how does corporate of America show the bottom and the top line profits compared to the current valuations in individual equities in the NASDAQ component. I will be more than willing to tell you that there will be individual stocks that we're going to cover prior to the earnings before the releases where those equities would drop and become buyable, and that the put to call ratio in the NASDAQ composite, NASDAQ 100, remain totally imbalanced. So therefore, the volatility in NASDAQ stocks have not hit the ceiling, and they will have on an individual basis during the reporting session that starts Monday, continues through the month of October. Seasonality is that rallies or year-end rallies, Christmas rallies, Thanksgiving rallies, they got to set up from an oversold condition. They don't set up from overbought conditions, and that's the end of the story.